it's not easy to find and read through these analyst reports for UBS and Goldman Sachs. It sucks reading it, to be honest with you. And they're 25 pages of a bunch of mumbo jumbo. And then they say, yeah, gold's going to 3,000 by the end of the year. But if you only relied upon, and that you consider yourself very well read by reading the Wall Street Journal, watching Fox News, and paying close attention to the markets, you are missing this completely and totally. There is your massive contrarian indicator. Not only are the biggest boys in the world telling you, yeah, this is where it's going, but you can't find it unless you dig. I don't know. To me, it's a massive contrarian indicator, and I would say that's probably selling it short from where it ultimately goes.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 30th through October 7th, 2024, while supplies last. First, we feature backdated 1-ounce gold Canadian maples at just $60 over spot. Next, we have 2024 1-ounce silver Britannia at $3.10 over spot. And finally, the 2024 1-ounce silver American Eagle is still just $5.25 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We are always delighted to have this widely followed returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us every week for a weekly market update. Today is Tuesday, October 1st, 2024. Happy October, everybody. Happy Rosh Hashanah for those of you who celebrate that. Andy, thanks for coming back on Liberty and Finance.
Good morning, my man. Good to be here. Thanks for having me.
Last week, we had a eye-opening look at the World Gold Council's annual survey of central bankers' reasons for why they are looking at gold, why they're buying gold, what they think that their peers are doing across the global banks around the world. There was one chart on there that I forgot to bring up. It's right near the bottom of the chart. And again, we'll put a link to this World Gold Council survey in the description of this video so you can all peruse it to your heart's content. And this one is called, it says, chart number 7, how relevant are the following factors in your organization's decision to hold gold? And this is a comparison of the last 2 years. So this is a what's new on their mind from 2023 to 2024. One thing that I wanted to show you here was the reasons down at the bottom of the chart, the top 4 reasons here: long-term store of value, inflation hedge. Inflation, as we know, has been, anyway, do you have any comments about that? Long-term store of value and inflation hedge.
Yeah, well, it's interesting because over the past 2.5 years, according to the official numbers, and we all know those official numbers are vastly understated, but the central banks of the world have purchased 1,250 metric tons of gold, which is worth about $80 billion. And when we talk about a government that by its own estimate will take another $22 trillion in debt over the coming decade just to keep the lights on, so to speak, to roll over the obligations that we have and to continue to fund our spending habits, well, that's an awful lot of money, and I'm sure that those are severe concerns. But think about this: in other words, if the central banks were to purchase, let's say, 5% gold right now in U.S. dollars, just converting 5% would be another $300 to $400 billion in purchases. Now, an $80 billion infusion pushed gold up to its all-time high. At the same time, we have a strong dollar, we have positive real yields, and outflows out of the ETFs. What happens if they just convert 5% of their dollar holdings? And it seems that this has been a trend that's been accelerating. Now, granted, that's $300 to $400 billion. That's 5 times what they bought over the last couple of years. But what I'm getting at is that as these central banks continue to de-dollarize, they realize that inflation has been chosen over austerity, the way that all governments have. What I'm trying to say to you is this: you add that kind of money, you're talking gold that could easily be up above $10,000, because $80 billion pushed it up here to 2,600 and change with virtually no U.S. participation. And I think that you are seeing and will see kind of like a hockey stick, right, where the acceleration in de-dollarization accentuates. And I really do believe that that's as crazy as it sounds to me, a conservative estimate. I can't imagine that all you would see is 5% of the $8 trillion in U.S. dollar holdings that these central banks hold around the globe would be converted to gold. I think that number will be much more. But 5% would be 300 to 400 billion injection into gold. And that's 5 to 6 times what they've already bought in the last 2.5 years, which has been the driving force behind the rise in gold. I don't know. I happen to it's rocket fuel waiting to happen. I really, truly do. And this is a trend that has done nothing but accelerate.
Just to underscore a couple of the points you made there, if you look on the right hand, maybe third of the list there, it says policy tool, concerns about sanctions, anticipation of changes in the international monetary system, and part of the de-dollarization policy. So all of those were on the radar this year of central banks that are, as far as why they're buying gold. Also to mention there on the left, where the highest ranked ones came in, performance during times of crisis. We talked about that in the past. They're anticipating the need to prepare for crisis now.
Yeah, I agree. And that's what you see. Plus, we just lowered interest rates. And according to the World Gold Council, historically, every time we see a Fed cut, gold has rallied as much as 10% in the 6 months after the first Fed cut. So we just saw the first Fed cut. We're seeing increased central bank demand. And we're now beginning to see the ETF start to tick up. I mean, in terms of you try to lay out an argument for a bullish case for gold, I don't know their path. And that is one of inflation. And so when you talk about inflation, sanctioning, all of the things that these central banks are thinking of, not to mention the BRICS and their gold-backed settlement currency, which again has been reconfirmed that this indeed is real and will be discussed in the meeting here in the next 3 weeks in Russia. Yeah, I think we could see much higher prices over the next 6 to 12 months, especially as we are now banking another 50 basis point rate cut. At least that's what the smart money thinks will happen. So, yeah, in every metric, gold is at all-time highs. But maybe the flawed logic is that it should be a whole hell of a lot higher, that it's been suppressed for so long that these numbers that we are all awestruck over are really well short of the mark, just because it hasn't been able to reach its real price due to the massive shorting on both the LBMA and on COMEX. Maybe, just maybe, all of these other assets that have reached such stratospheric highs in gold and silver, kind of painting a picture, allowing most people, including maybe even you and I, to sell short where gold and silver really ought to be and where it is ultimately going. And I think you can look at some of the traders at Goldman Sachs and at UBS who might echo that same sentiment. I'm sure we'll talk about that in a moment.
Right. We did want to look with you at the Goldman Sachs Gold outlook for 2025, and also upcoming looming risks of a major disruption to the international supply chains because of pending strikes by dock workers and port workers in the U.S., up to 40,000 of those or more. I just want to hit a couple more points on here on the bottom of the chart. Near the left-hand side, still some of the top concerns, top reasons for central bankers buying gold this year. It says effective portfolio diversifier. We've talked about why gold is like maybe the last asset standing in terms of being an effective portfolio diversifier. No default risk, highly liquid asset, serves as a geopolitical diversifier. Concerns about systemic financial risk. Wanted to point that out because why in the world would central bankers all around the world be buying more gold than they've ever bought before? And they name as one of their reasons concerns about systemic financial risks. Any final thoughts on that before we move on to the Goldman Sachs Gold Survey?
Yeah, I mean, 100%. It's 100%. All of these banks are systemically tied together. Why did Credit Suisse have to get bought out by UBS? Because it was systemic. And we have a situation where the banks are over leveraged and undercapitalized. And I don't know if it's a premonition. I don't know if it's wishful thinking. I don't know what it is, but there's just this overwhelming feeling that I have that they're going to sacrifice Bank of America. They're going to let Bank of America fail. Maybe that's why Warren is doing what he's doing by yanking all of his shares, not all of them, but a good portion of them. And this is the bank that has to be bleeding massively from their large short position in both gold and silver. Whether it's Bank of America or another major bank, I think the systemic nature of the banking system, and in particular the large commercial banks, is real. It should not be understated. The world itself is quite systemic right now. So the systemic risk in the bond market, where, you know, the bond market in and of itself is just because it underpins so many other industries, like the insurance industry and even like the banking industry. And, you know, we're going the wrong way by lowering rates, at least on the front end of the curve. So what does that do to the back end of the curve? But you end up with a situation where this is a problem for funding our deficits. Ultimately, rates must go higher. So here we are again, lowering rates and perhaps setting up these institutions to load up on treasuries, only ultimately to see rates go the other way, because at some point you have to fairly compensate people for taking on all of this risk that the central banks are illuminating here, the default risk, the systemic risk, the inflation risk, and the de-dollarization risk. So, yeah, I think systemic risk, and we've talked a lot about systemic risk, is something that will, it's the same way of saying counterparty risk. Counterparty risk is accentuated because of the systemic nature of everything. The domino right in front of you may not be the bad one, but it could be the 1, 2, or 3 behind you that you don't even see. Quite frankly, I'm surprised that we haven't seen a domino fall yet. If the government wants to move towards consolidating the banks, which I think they do, and I know Lael Brainerd does, to issue a CBDC perhaps soon, then I think you have to ignite that fuse. And what better way to ignite the fuse than to let a major player fail, inciting a bail-in, initiating a bail-in, which then really creates systemic risk as people in this country wake up to what a bail-in is and the ramifications of that, the consequences of that, as people run to yank their money out of all of the other banks, which creates more systemic problems in nature. It's real and might be the one thing that we are underestimating totally as to the real problem with the system.
You mentioned Bank of America. It was illuminating, I thought, that back in the latest tranche of Warren Buffett sale of BOA stock that was this summer. He's sold tranche after tranche after tranche all summer and fall here, and the numbers keep going up and up, and yet the CEO of Bank of America was asked, why does he think that Warren Buffett is selling stock? And his answer was classic. I don't know. I have no idea. It's exactly the kind of answer you get out of Janet Yellen at the Treasury when you ask about something that's obvious.
Right. Well, and look, the guy is the greatest value investor of all time, and he doesn't see value. That's the bottom line. And maybe he sees much more than that. Maybe he sees risk. But I just have a feeling that there will be a problem with the banks that ignites the systemic problem. And look, more than anything, the central banks, done again, they may have the most money, but as I've said over and over and over again, they know the playbook. And that's more important than anything. If you understand where we're ultimately going, then only in retrospect will those moves have been obvious. But to me, it is obvious because they know where it's going. And everything that they've done back at it, that they knew the playbook, whether it be Basel III or the reclassification of gold, or all of these decisions, even the new settlement currency and how gold must be held within the borders of the countries that possess it. So do you think there's any coincidence that all these banks not only are massively buying gold, but also repatriating it, just like India, who bought 1.5 times the amount of gold in the first 4 months of this year than they did all of last year, which was a record year. It's because they know the playbook, and the BIS is center in telling everyone the secrets or giving them the playbook and saying, now make your maneuvers and do it quietly and do it as swiftly as possible, because there's going to be a change, whether it be reclassifying gold as tier 1 or issuing a new settlement currency in the BRICS nations. They know where it's going, and that's why you don't listen to what they say, maybe. Just watch what they do, and that's the key.
You've also been looking closely at the Goldman Sachs gold forecast for the next year. And as you mentioned, the central bankers know the playbook. Bullion banks seem to be caught, some of them, maybe perhaps Bank of America in a really tight spot. What is Goldman Sachs saying about their outlook for gold for the coming year?
Well, I'm going to read UBS first because it's not as grandiose as Goldman. They're close. But UBS says gold has risen by 29% this year, consistently breaking records on the way up. Meanwhile, the metal has risen above our long-held year-end target of $2,600, ahead of schedule. And according to the World Gold Council, as I mentioned to you, it has historically rallied as much as 10% in the first 6 months after a Fed cut. We now expect gold to reach $2,750 per ounce by the end of 2024 and to $2,900 per ounce by the third quarter of 25. And so that's pretty significant, but not as significant as Goldman Sachs, who is talking about right now in the fourth quarter of 2025, by the end of the third quarter in 2025, $3,000 gold. By the end of the year in 2025, $3,080 an ounce. And this is elevated from $2,700 to $2,900 an ounce. Again, these banks are coming out and saying, we're moving to $3,000 an ounce. And Goldman Sachs has said that they're being inundated with precious metals requests on their trading desks, which is a very, very, very big deal, obviously. And it is being evidenced by the first time in 2.5 years, we see an uptick in ETF holdings. And so as ETF holdings pick up, as the Fed pivots and lowers rates, probably another 50 basis points here in November, this is just rocket fuel for gold, which has done what it's done, again, rallying 29% and 47% since 2022 when we saw this divergence in 2022 where the ETF started to outflow in the U.S. and gold started to go up, really. And so this 47% gain since 2022, as the public has not been involved in it, with positive real yield and a strong dollar. Now you see dollar kind of hanging right at that 100 mark on the Dixie, and could very well fall from there and drop a little bit or maybe a lot, of course. And then you see that the yields coming down, and now the ETFs ticking up. This is all huge, and to see Goldman and UBS say these things is again very, very significant. They're acquiescing to the reality that, again, you can only manipulate a market over an extended period of time, done again by pushing it in the direction that it is going, and that is the key. That maybe these banks realize it's as dumb as a mud wall, like Bank of America, to be naked short in a market where the rest of the world is voraciously accumulating metal, to the point where just in the month of August, 8.1% of all the silver held that's available for delivery, and the LBMA was delivered 8.1%, over 25 million ounces in the month of August. So it's accelerating the acquisition of gold. And it's also being done in a manner to not upset the apple cart, as we talked about last week, with 160 metric tons purchased by Saudi Arabia, but not disclosing it the way they're supposed to the IMF, because they don't want to upset the big kahuna, the United States. And yet they're playing both sides of this game. Ultimately, if you just put all of these things together and realize that the commercial banks and the central banks, who are the most collectively well-informed and well-financed traders in the world, are telling you where this is going. And if you don't pay attention to the Goldman Sachs report or the UBS report, where the hell do you find it, right? Where are you going to find it on the mainstream? Are you listening to the mainstream, who isn't saying a word about any of this? It's not easy to find and read through these analyst reports for UBS and Goldman Sachs. It sucks reading it, to be honest with you. And they're 25 pages of a bunch of mumbo jumbo. And then they say, yeah, gold's going to 3,000 by the end of the year. But if you only relied upon, and that you consider yourself very well read by reading the Wall Street Journal, watching Fox News, and paying close attention to the markets, you are missing this completely and totally. There is your massive contrarian indicator. Not only are the biggest boys in the world telling you, yeah, this is where it's going, but you can't find it unless you dig. I don't know. To me, it's a massive contrarian indicator, and I would say that's probably selling it short from where it ultimately goes.
We want to talk also about the major disruption in supply chains. It was pending and looming. It looks like as of 12:01 a.m. this morning, there's been a massive dock workers strike that's all down the eastern seaboard from Maine to Texas, at least 45,000 workers of the International Longshoremen's Association. Your view, you've been watching this, and you've lived through as the head of the CEO of Miles Franklin Precious Metals, which has supply chains from mints all across the world, something that has affected you in the past. We certainly saw that during COVID. Your outlook on the impact of this, not only on the precious metals industry, but gosh, the whole economy, and what it signifies as a broad struggle between labor, people that are pinched with not making ends meet, with the evidence of inflation surfacing itself, et cetera, and likely impact of disruptions like this on not only availability of important things, but on prices in general, et cetera.
Yeah. So this is my own opinion, so take it for what it's worth. First of all, what we saw during COVID was a supply side shock. And that was due to the lack of capacity, a demand side shock. This is a supply side shock. A demand side shock where people were loaded with funds because they were given stimulus checks and they were sitting at home and they couldn't go out and they were buying stuff online, massive amounts of stuff, right? And there was more money chasing goods that were not able to get in because of the log jams at the ports. So this is a supply side shock where it's now an issue of the ports shutting down and goods not being able to get in, but you don't have massive demand, right? It's just the flow, the supply chain flow is being stopped. During COVID, everyone was buying stuff from their computers at home, and all of that stuff couldn't get in. But what I'm getting at is that the supply side shock is far more damaging to the economy than the demand side shock, because the demand side shock, there was purchasing going on, and the economy was at least experiencing demand and purchasing and transactions, whereas here it's different. Here it's a situation of products just not being able to get into the ports, and that's a bad deal. And of course, you talk about the ramifications of things like medicine and food, perishables. The majority of all the bananas in the United States, 80% or so, I think, if I'm not mistaken, come from being imported. And you know what a banana looks like if it sits in hot weather for an hour, it looks bad. So you have really big problems in terms of perishables, meats and fruits and vegetables and medicines. It's a major deal. It really is. And it's not going to get better anytime soon. If you look at China as an example and look at their ports, you have 10 people sitting in a room with computers and joysticks, and almost all of their port infrastructure is automated. You take a look at the United States, it's far from it. And this is what one of the problems is that the ports want to be more competitive, i.e. capitalism, and they want to cut their costs and increase their efficiency, which would mean less workers, which would mean more automation. They don't want that. And then, of course, you take a look at the pay that they're getting paid. They make much more money on the West Coast than they do on the East Coast in terms of the dock workers. And so, the conventional wisdom is, well, why not just go to the West Coast? Well, not so easy. What are you going to do? Sail around South America? There isn't a Panama Canal in Mexico. And so this becomes a problem. And of course, a lot of the businesses saw this coming. This is something that has been brewing as their contract expired today. And so people have front run this. People have bought more stuff into the end of the third quarter here. And at the same time, a lot of them have gone the other route around to Los Angeles. But you take a look at like auto manufacturing. The majority of all the cars that come into this country are Baltimore and South Carolina. What do you do? And so this is a deal that I don't think people will really feel its pain unless it starts to go more than a couple of weeks. And then it could get serious. It could get really serious. There was something that I read that said if it goes 1 day, it takes 5 days to rectify it. If it goes 1 week, it could take as much as 5 weeks to rectify it in terms of getting the supply chain up to speed. But who knows how long this goes. This is not something that will go away easily because the people that own these ports, they want automation. The workers don't. They want higher pay. They don't want to pay it. I don't know how long it goes, but I don't think that you're going to see the government intervene the way some people think they will with the Taft-Hartley Act, which could come in and say you have to go back to work during the negotiations because the numbers aren't going to reflect into the CPI. They're not going to reflect negatively by the next CPI print, which is right before the election. And with the unions, they vote en masse. And if you piss off the unions, you're going to have a large group of people turn against you. It's interesting. The Teamsters, who have voted Democrat forever, have remained non-committal. They are not endorsing either candidate. You piss off the longshoremen and their union, you're going to have a massive vote against the Democratic Party. So I think they're going to stay out of this. And it could go longer than people are really bargaining for. So, if you need to get your car fixed and need parts, you might want to ramp that up and bring it in right now because the majority of all of these parts and actual automobiles themselves come from the East Coast. But again, the big problem here is that it was better for the economy, even in the middle of COVID, when we had the demand side shock where there was more demand than there was capacity to bring it in than there is here, where it's a supply side where you don't have the massive demand, but you can't get any of the goods in. And that's going to create a bigger problem for the economy ultimately. So it's a bad deal. It truly is. And it'll be interesting to see how it plays out, certainly into the election.
Andy, before we wrap, we want to make sure and give you a chance to let people know about our weekly specials this week so they can plan to acquire assets while they're still available, et cetera.
Yeah. And if you think about it, I mean, this is, who knows if I don't think this would affect the precious metals because while 70-80% of all the goods in this country come on ships, I would argue that the precious metals do not. They fly in. They're not going to be sending those on cargo ships, but nonetheless, it's again, we're entering a period of time to me where the real issue is with precious metals is an awakening by the American public. Something's going to wake people up. I don't know what it is, but something will. And when it does, then the real issue will be getting product. And that is your demand side shock, where there's far greater demand than there will be ultimately supply, where 0.5% of the public in this country has been accumulating metals. And that's way, way low when you look at what UBS and Goldman are saying, when you look around us, when you look at this world, it's so obvious to you and me and the people watching this show, like, how are people missing this? There will come an awakening, and that will rush people into metals, even if it's only a 5% allocation. That's a tenfold increase in demand. So that's the reason to buy it, not because of the port shock, but because we're getting very late in the game. So again, nothing really special about these specials. They're just good coins that we take for granted that you might not be able to get so easily when there is a collective awakening. Gold Maple Leaf's at $60 over the price of gold. That's on par with as low as I've ever sold them in my career. As crazy as it is for me to utter that. And 310 over spot on Silver Britannias. as well. Again, this is one of the 6 major mints of the world, and on par, maybe 30, 40 cents higher than they were sold for most of my career. Again, these high premiums that were just there and growing every single day, it seemed, over the last 3-4 years, have come down to what I think is bottom level. I don't think they go any lower. In fact, I'm surprised they haven't really started to go higher. Only in select few things like the American Eagles are we seeing rising premiums. And this stuff right here is just sitting here stupidly cheap, if you want to know the truth, because all it takes is one real event to wake people up. And just like that, it's all gone. So those are the 2 specials this week. I did just buy a whole bunch of silver kangaroos yesterday from an estate. I'm expecting to offer those next week, assuming all goes well. But, status quo done again, status quo in a world that is changing and evolving daily. Just a couple other things that I want to mention before I let you go, just from the too stupid to be stupid category. I love these little stories. This one is really strange to me, by the way, and I want you to think about it. I'm going to read something to you here that I don't know. It's really strange and ominous if you take if you think about it. 40 days left to go before the election, and you have Congress is working on rolling out the 28th Amendment, also known as the Continuity Amendment. This would allow for the immediate replacement of 100 or more members of Congress in the event of a mass casualty, without holding an election or involving voter participation, kind of like what they did with Kamala. Just put her in. Now, why the heck are they doing this 40 days before the election? Are they telling us that there's threats of a mass casualty event where 100 or more members of Congress die in a mass casualty event? And he says, traditionally, we've had hundreds of special elections over the years for situations where an elected official might step down, die in an accident, or under mysterious circumstances. Previously, a special election would be held to fill the seat, but now it seems that's no longer the case. Welcome to 2024, where things are changing rapidly, just 40 days before election. That is a big red flag. And what the hell are they doing this for? Instead of all of the other problems we have, are they telling us that we should be concerned about a mass casualty event in Congress? I don't know. And it says the proposed constitutional amendment would require each member of the House to submit the names of at least 5 individuals from his or her political party to their state governor. In the event of that representative's death, the governor would choose a name from the list within 10 days, and the House Speaker would be required to seat them immediately. No special election. You can't make this stuff up. I don't know how you feel about that, if you want to mention something or all. If not, I can go on to my next too stupid to be stupid comment.
Yeah, well, the only thing is the observation that we saw right immediately after 9/11. There was immediate plans rolled out with the Patriot Act, et cetera, which Daniel McAdams from the Ron Paul Institute said is a cancer in our country's politics and unconstitutional. We saw right after the beginning of the recent pandemic, elaborate plans that had been prepared ahead of time in advance, and so on and so on. So it's always concerning to see draconian or unconstitutional plans being drawn up in advance as though you need to have them in place because there's something coming. That's never concerning to us.
2 other things. By the way, just one other note. I made a note to myself. I forgot to mention it, that, this could be way far off, but U.S. retailers account for half of all container shipments, and they are very vulnerable as we approach the holiday season. So if you're thinking of buying that Christmas present for someone you love and care about, you might want to get that sooner than later. Just saying, it's probably going to be okay. I don't want to be an alarmist, but all right, 2 other comments from Too Stupid to Be Stupid, and then I'll sign off and say goodbye. I know you are visiting family and not home today, so I will do as quickly as I can. Number 2 is Governor Gavin Newsom, this knucklehead, this bozo. Other than that, he's probably a good guy. Signed a bill into law on Thursday that bars local governments from enacting laws to require residents to show a valid form of identification in order to vote. I mean, how far down the rabbit hole have we gone? Think about Cloward Piven and trying to get people to a loyal serfdom of voters to never vote Republican. Well, you let all these people in the country illegally, and then you say, we are signing a bill into law, which he just did, not requiring residents to show a valid form of identification to vote. It's illegal to ask them for identification. You can't make this up. And then the last thing that I want to talk about, in a world that, one of the reasons that I love gold and silver so much, Dunnigan, is we live in a world that is void of privacy and getting worse. We live in a world of increased litigation and decreasing of privacy and civil liberties, and we continue to give them away. Ford has just patented a system in their automobiles that will listen to both the driver and the passenger, and it's a system that will determine what sort of ads to serve that should be listened to based upon voice commands. It will recognize your voice and will add preferred advertisement for you, and it can listen to conversations and determine if it's better to serve you visual ad while you're talking or an audio ad while there's a lull in conversation. So now you have your cars that are listening to you. You have Alexa that is listening to you. You have your phones that are listening to you. You can't make this stuff up. It's like 1984. And, I think that there's a lot to be said for owning something that allows you a little bit of privacy outside the matrix. Now even our cars are dragging us back into the matrix. So I just thought you might find that interesting. That's all I have. I just wanted to add those two stupid to be stupid comments, and I will look forward to picking up with you where we left off here next week on a live stream. Appreciate your manner of thinking and looking out for us and for our viewers and subscribers. And I frankly think we should institute the Too Stupid to Be Stupid chapter as the last, before we sign off every week. So let's see if we can keep that going, because it's a good idea. Seems like there's no shortage of fodder for that one. And we all need to be aware of that so that we can make more prudent choices. Andy, thanks as always for joining us here on Liberty and Finance. You stay well, my man. Look forward to talking with you next week.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 30th through October 7th, 2024, while supplies last. First, we feature backdated 1-ounce gold Canadian maples at just $60 over spot. Next, we have 2024 1-ounce silver Britannia at $3.10 over spot. And finally, the 2024 1-ounce silver American Eagle is still just $5.25 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.